Hello everyone, welcome to the Ichimoku daily analysis for gold for Tuesday, January the 4th, 2011. Well, a change of trend to the downside today, and we have a candle making a lower high and a lower low. It's a very large red body candle, which denotes a very bearish trading day today. Very large red body means that the sellers made a substantial amount of net bearish progress on the day between the open and the close. And the market has closed down towards the low, which means that the sellers have closed the market in control and they're very strongly committed to taking this market lower. Previous days trading we had a spinning top type candle, and that was in this area of resistance that the market has tested now for the third occasion, and we've had price rejection from that area. So that extends from this all-time high roughly around 1432, 1433, down to roughly around this area around 1400, and it's a fairly large zone, and it's been tested now on the third occasion and the market sold off, so a very, very strong area of resistance. The spinning top type candle, as I've said, is a candle of indecision, and that made us be aware of any potential change of trend. So we had to watch the low of the candle, the spinning top type candle, for a potential lower high and lower low, and that's what happened for today's trading. But it was also a Japanese candlestick reversal pattern, a bearish reversal pattern called a harami, and that's where the body of the current candle is engulfed by the body of the previous candle, with the previous bullish candle. So that made us especially alert for a change of trend. Now, whether this trend continues down is debatable. We have very, very strong support down around this area. We can see these candles here. Initially an area of resistance, and then that area of resistance turned into support, and we can see these very long shadows on these candles as it tested this area. Then in this trading period, the market found resistance in that area again, and then with these candles the market found support. Very long shadows and buying coming in. However, we need to remember that the buying is limited by the resistance that extends up to around 1433, so that's important too. Now we can see also how the cloud acted as support for the market. On the previous two occasions at these swing lows, the market found support at the top of the cloud or just within the top of the cloud. So there's a very good chance that if the market does continue trading off, then we will see some support around that area. So that's very important for this market. Anywhere through the cloud can act as an area of support, so that support area will range from roughly 1365 down to roughly 1345. Now, that area of the cloud is actually fairly thin too when we compare it to this trading period from a few weeks ago. So that means that the market will need to have less momentum to break that support area than it did previously. So that could be important for this market. If we do see a bearish breakout down below this cloud, that could be important. It could mean that this substantial uptrend that the market was in may be faltering, it may be over, and the market may trade down lower and test certain areas of support, certainly down around 1300, the round number. We don't want to preempt that though, but it is something that we should be looking at as a potential event in the market over the next couple of weeks perhaps. Although I'm not saying that there is a strong possibility that it will happen. This market, as we've said earlier, could find support within the cloud and bounce off and test the area up around these all-time highs again. Now, the market is still trading up above the cloud, so the market maintains its overall positive bias that it's been in for quite some time. We can see here all this trading in the chart window is above the cloud, so very bullish trading. The market, however, is trading down below the Kijun-sen and Tenkan-sen, which means that the market is negative in the medium-term and fast-term time frames, so that's important for the market in those time frames. We haven't had a crossover of the Tenkan-sen below the Kijun-sen yet. When that occurs, that's a bearish signal, but if that occurs above the cloud, it's only a fairly weak signal. And it's usually a fairly weak signal because the market will generally be up above the cloud and will interact with the cloud and find potential support around there. And that's certainly the case here. So it's not a very strong signal that we'd want to take to go short based on that. If we look at the Chiku span here, that's still trading up above the corresponding price action, and that tends to reinforce the bullish price action that we've got in the longer term time frame. So overall, once again, we need to watch the low of the current candle for a potential continuation of the trend to the downside and a test of these support areas at these swing lows, and certainly down through to the bottom of the cloud.